Okay, now that we've gone through the statuses, I'm going to talk you through the package that you'd receive from student finance. Now, this is all pretty specific to student finance England, but the other countries and the other domiciles run on a very equal basis. There's a few little changes. Wales gives you a little bit more for this, and Scotland does it slightly differently, where that you can apply for funding to go and you don't have to pay for your fees, and they provide you with bursaries. But if you then are deemed as Scottish in the Scottish residency area, but you come to England, then you would need a loan because you'd need to pay for the fees in England. But I'm going to talk to you about England at the present moment, and most of the stuff runs along the same way. So I'll talk to you through the tuition fee loan, the maintenance loan, and extra support. And I'm going to start with tuition fee loan. So basically in England, there's a cap of tuition fees. State funded universities can't charge more than 9,250. That doesn't necessarily mean that that's what you might go to. You might go to a private university which does attract funding from the student loans company, and if you do, then you'd need to make sure that their course is registered for you to be able to attract that. So state funded university, we pay directly to the university the tuition fee, and we pay them over 3 terms, 25% in term 1 and term 2 and 50% in term 3. So students don't have to find that money up front. We pay that money basically. And the courses by approved providers, that might mean a private university, basically we will only give a maximum up to £6,165. Now you'll need to do a bit of research here, because quite a few private universities may charge a lot more than that. I don't know, maybe you want to do a pilot's license and you want to go to one of the universities that does that, they will charge a lot more for that. They might charge around about £25,000. We won't be paying that amount of money for your tuition. We would only pay up to, say, £6,165 of that if it's a registered course with us, but the rest of the money you'd have to find from somewhere else. But all the state funded universities, they can't charge more than 9,250, and we will cover those fees completely. Now, the tuition fee doesn't depend on any household income, so it doesn't matter who's earning any money within the household. We will still look to give you the full tuition fee loan if it's up to 9,250. Accelerated degrees, there will be a higher fee for that. Basically, what an accelerated degree is that instead of doing your degree over 3 years, the university has compounded it and put it into 2 years. So they charge a slightly higher fee for that, and we will cover that fee for the state funded universities. Next slide, please. Now I'm going to talk you through your maintenance. This maintenance is what you get assessed to be able to live on. Generally speaking, you apply for student finance, although I probably will talk about it a little bit later. We can't open our application process till we've got all the information from the government and the policies are all up to date. So England, Scotland, Ireland, Wales, we all try to open our application process as early as possible. However, we are a bit later. We're now opening our processes about February. Sometimes it can be March. Wales, I think, opened in March last year. So it's looking at our dates for application processes. So you need to apply when we launch. We also have a deadline date, and it's usually for new students about the 25th, 26th of May. Basically, that means that we want you to apply, put in your application and send us all your evidence by that date for us to be able to ensure that we can get your funding there on time. If you don't give us all of that information by that deadline date, it could mean that we may not be able to get you all your money on time for when you actually start. All right. So tuition fees and maintenance loans don't have to be repaid until you've actually started working and you're earning money. And I'll talk about repayment a little bit later. Next slide, please. Oh, sorry, you might have to click through this one. Do apologise. So it depends on where you live and study, where you're going to be, what money you're going to be getting. So if you're living with your parents, basically we will take, if you're under the age of 25, we will take your parents' income into account. If you could just click through the other two, I'll just talk through them. And these are the maximum amount of money that you would get. You don't get this amount in one go. As I mentioned earlier, you get this over 3 terms. So the £8,171 would be broken into 3 terms, equal amounts, and you get that given to you at the beginning of each term. If then you decide to live, let's say on campus or in a home with other people, but you are going to say Leeds, Liverpool, Exeter, outside the M25, we call that the elsewhere rate. And again, that gives you a little bit more funding, up to £9,706. These are the maximum loans. I will talk you through those in a minute. If you're in London, generally within the M25, some of the universities that are on the peripherals also get London allowance. For instance, Royal Holloway, University of London, is just outside the M25 in Surrey, but it falls into the TW Greater London area. The postcode is in London. So you get the London rate of up to £12,667. All right, next slide, please. So if you're living with your parents and they've got an income coming through, but let's say they're earning £100,000, then basically you wouldn't get the maximum loan. You would get the non-income assessed loan of £3,597, and that would be broken into 3 terms. If, for instance, your parents are earning, let's say, about £40,000 a year, then you would be partially income assessed. So you would get the non-income assessed amount of £3,579, but you would be income assessed for another £4,574 based on your parents' income. The same applies if you were going elsewhere. And if you're under the age of 25, then we would take your parents' income into account. If you're on your own and you're deemed as an independent student, you would be getting the maximum amount of loan. So you'd fall into the maximum category, and we wouldn't be looking at parents' income. If you're living with a partner, or you've got a civil partnership, or you're married, then we would be looking at your partner's income to see what we would assess you for. So you'd always get the non-income bit, but then we would look at the partner's income to see whether we would assess you for a little bit more. Overseas, that isn't for overseas students coming to the United Kingdom. This is, let's say, if you're doing a course and you're doing a 3-year course. Most of the universities in the UK offer a study abroad element, and that means that even if it's not part of your course, some of them are part of the courses, and that would mean that you would doing 4 years. So we would give you 4 years worth of funding. In this case, most courses are 3 years, and you've got an option to be able to do a study abroad. Maybe, let's say, you've decided that you would like to do a year abroad in Italy, and you would like to do that as part of your course, then we will look to give you funding to cover that year. Now, who you'd speak to about that is your study abroad teams within the universities to find out what your choices are. I would suggest probably doing that in year 1, because lots of students don't really know about the study abroad elements. So it would be useful for you to have a look at that, but also talk to them about your status and how that's going to impact. And maybe you don't want to do a whole year, you might just want to do a term, or you might not want to do that, and you might just want to do your course and complete that. Next slide, please. So now I'd like to talk through extra support. What extra support is available for you from the Student Loans Company? So basically, if you have a disability, then we will also give you extra amount of funding for it's called Disabled Students Allowance. So when you apply, when I talked to you about it, and I said the applications open up in February, so when you apply for your student finance, on the application it will say, do you have a disability? If you tick yes, it'll say, after you've completed this application, a new form will open up asking you about your disability. Now that form, once you've opened it up, you would would then need to upload any disabled, anything that you've got showing your disability, and that will come back to us, and then we will ask you to go and have an assessment done on your disability for the course that you're doing, to make sure that you're on equal playing field. Now, those particular people who are doing your assessment may say, well, actually your disability is that your eyesight isn't so good, you need some sort of app to be able to make things bigger, and you might need to be able to have a reading app. So they will then cost that out, tell us how much that is. We don't pay you this money, we pay for the assessment centre to put that in place for you, and we pay them the money to, or the people who are actually providing the equipment, we pay them directly, and your equipment and everything then should be ready in time for you to be able to start your course. If you've got children or you've got an adult who's dependent on you, we will also look to fund that and give you some bursaries. So basically we will give you something called Parents Learning Allowance and Adult Dependent Grants. If you're studying overseas as part of your UK course that I just talked on, and also if you're doing clinical placements, then there is funding for that as well, and we cover that. If you're studying things like NHS courses, midwifery or allied professional courses, then basically your course generally tends to be a lot longer than a normal course. Let's say you're doing, one person's doing history as a university degree, but somebody else is doing maybe midwifery. Well, the English degree course will be about 30 weeks approximately, whereas a midwifery course could be 40 or 45 weeks. So what we do as the student loans companies, we give you extra funding for each of those weeks that you're doing a complete week. We give you extra funding for that course. So because you don't have time to work basically, so that gives you extra funding for that course. So you'll get, in London it's around about £102 a week extra. But on top of that, you can actually apply to NHS BSA, which is a bursary service. And once you start your course, the university department that you're with will let NHS BSA know that you're on the course and that you're entitled to another bursary. And you can find out more about that from this particular link that I've given you here. And the university should be able to also make sure that you get this bursary. And some of them are up to like £5,000 for a bursary. And a bursary means you don't have to pay this money back. Next slide. Oh, just before we go on to the next slide, you might also be able to get extra funding from a university if, for instance, you might be the first person in your course to be able to go into university. It might be on household income. Universities also do different bursaries, so it's worthwhile checking on open days when you go to those to find out what other funding you could be entitled to, and those you don't have to pay back. Next slide, please. So if we now talk through how you apply, how you get paid in your application and how you get paid, this is basically how you apply. Now, students need to apply every year for their funding. You just don't do it once and that's it for the 3 years. You need to apply every year. So you will apply as a returning student the following year. So if you're a new student, you don't need a confirmed place. So for instance, you wanted to think about going next year. As soon as we launch in February, you won't know whether you've got into whichever university you've decided to apply to. You might have applied to 3. You don't know which one you're going to get into. You don't need to know that. You just apply on the application, you put down your first choice of university, and we will do the rest. We'll put your application through, we'll assess you. As soon as we can get you assessed, and maybe then come in June, you find out, oh, actually, I'm going to this university, then you can go into your portal where you've applied and you can just do a change of circumstance and say, I had put this first one down as my first choice, but I've got into my second choice and I'm going to go there. Then we will then reassess you based on that and send you a new application. So it takes very little time to do that particular one. So you need to do it at the right time. So you need to make sure you've got all your information and everything ready to apply. And you need to also read the terms and conditions. When we go through it, it does say about terms and conditions there. It would be good to take your time to read through that. And also, if you're not sure about any of these, is to go to our campaign page, which then goes through things like I've talked to you about the Disabled Students Allowance, Parents Learning Allowance. It talks about how to apply. It tells you where to go and find out more information on YouTube. Those are the sort of things that you're looking for. Next slide, please. So in England, we don't have Student Finance England website. It sits on the Gov.uk site. Student Finance Wales, Northern Ireland and SAS have their own sites, and you can go directly onto a Student Finance Wales or Northern Ireland or SAS site. But for England, you need to go to the Gov.uk site to be able to apply. And then it talks you through, like on this page here, you can see it's Gov.uk. It tells you about the overview of what you get, full-time students, part-time students, your eligibility. It talks you through all the things that I have just actually spoken about. Next slide, please. You might need to click through this one as well. That's it. Okay, to talk through repayments. So we've talked about how you apply, how you get paid. So once you've done your application and it's all on time, you'll automatically get paid in term 1, term 2 and term 3 if everything's in on time. You can check your portal and you can upload information through there. So if we talk you through repayment now, and I'm going to talk you through the facts and figures. Sorry, Siobhan, you'll need to just click through these for me as well. It's about 5 or 6, I think. That's it. That's great. Thank you. So if you're starting next year, things have slightly changed for students who are starting next year. You won't have to make repayments until you reach a threshold of £25,000. For students who have started this year, it's 27,250. But for next year, if you're starting in September, then it will be £25,000 up to the April 2027 that threshold is held. Now you don't fall into repayment immediately. So let's say you've done your 3 years or 4 years and you've now graduated. Say you graduated this summer, you won't actually fall into repayment until the April after you've graduated. So it would be the following year. So if you graduated in 2022 here, then you won't go into repayment until April next year, 2023. And you'd only go into repayment if you're earning over £25,000 a year, because once you earn over £25,000 a year, whatever you're earning over that, you only make 9% is what we consider of that, and we then charge that to you as being what you will pay, and that comes out through your if you're working for somebody, the onus is on them to ask you if you've got a student loan. Then it will come out of your PAYE, so your salary slip. It'll come out like national insurance, tax and your student loan. So basically, let's say you're earning £28,000 a year, then that's 3,000 above the 25,000. You will be making a repayment per month of £17 per month back to us, and that will come out of your own salary straight away, so you won't actually physically see it. If your income drops below that threshold, you won't make any repayments at all, and your balance, whatever you've got outstanding after 40 years of going into repayment, whatever you've got outstanding will be wiped clean. I've given a link also to some of the blogs that you can have a look at on there. Next slide, please. And I'm sorry, you're going to have to click through this one. Interest is added. Oops, sorry, go back one. Thank you. Interest is added to your loan from the minute that you actually have the money in your account. All right. And for next year, students who are starting, the interest is going to be added at the retail price index plus 0%. So it will just be the retail price index that will be added to the loan annually. Now, basically, the retail price index comes in March of each year, and that's carried forward. So we'll get a new retail price index in March next year. That'll be the one that will be carried through to the September when you start. All right. And basically, just have a look at that one. Yes, we have an online repayment service, so you can always go to our repayment website and you can have a look at that on there. But we're also looking at your portal where you've applied. You can go back into your portal at any time. You can upload things. We even tell you on your portal when you're going to get your money, what's happening with your application. This came out this year, it's brand new and we're building on it. So hopefully within that particular portal, we should also have some information on your repayment, but that's not going to come for a while. But we do have a repayment website that you can look at and check. And I've given you some details about the link that you can go and have a look at there as well. Next slide, please. So this was announced, the information that I've given you was announced recently, and it's got a cap on there, and it was announced by the Department for Education. But we're doing a lot of campaigning on it so people actually understand their plans and what they've got. So if you're starting next year, I've given you more links. There's more information on Student Room about that. There's information on the Gov UK site, and we've got that on also on YouTube. We've got little videos that you can have a look at. Next slide, please. A little bit about budgeting. Sorry, Siobhan, just click through. I think it's about, yeah, that's it. I think you just need to think about things. So if you're going to open days, what are the questions that you need to ask? Okay, so if you're unsure about your status, you'll have student financial advisors at each open day that are going to be there. Go and see them. They'll have a desk or a place that you can go to. You can also make appointments to talk to them, and they might even be able to talk to you over Teams or over Zoom and go through a few of the points for you. So always do that. The second thing that I would say is that definitely visit the university. Some people I've spoken to have said that they always thought they were going to go to one university, but when they went to the open day, they decided it wasn't quite for them, or the course wasn't quite for them. So find out more about your courses and what materials you'll need, so you can start looking at budgeting. If you're doing nursing or medical ones, what books do you need to get? Can you get second-hand books? Will they come down? How can you get hold of them within the university? How much will the internet be? How much will your phone be? So you really need to sit down and do a budget. And again, the student financial advisors at the university do run budgeting courses. So you might like to go and have a look at that and find out, maybe you're going to another university that's miles away. What are the costs at those universities that you might have to actually look at? If you've got a television at the university, you will need to pay for a license. Things like that that you might need to know. If you're living off campus and you're living with a number of other students, you don't pay any council tax. So that's the sort of thing that you might need to know. Or for instance, let's say you're a refugee, but you've got a partner and the partner's earning an income. You can get, because you're a student, you can get 25% off your local authority housing, what's it called, tax that you have to pay for the bins to be taken and all of that sort of thing. So you can get 25% off that because you're a student. So it's really having a look at what money you're going to get coming in and what money is going to be going out. There is a calculator on the UCAS site as well, and they've got a lot of information, but maybe talking to one of the financial advisors will help you understand what bursaries you can get from that university as well. Could you work? Is there part-time jobs at the university? Because you can get ambassador programs, all of these sort of things. And if you've come from maybe a refugee background, they need ambassadors like you to be able to help other students through. So they pay for that service as well. So it's worthwhile looking at those areas. Next slide, please. So sources of information. Now, lots of them, there are a number of areas around this. A number of universities offer that service. You've got Student Room, where we've got information, understanding what you're going to be paying out. realistically, there's a lot of information out there. Universities of Sanctuary run certain things as well on a daily basis. STAR run how to apply for finance, and they probably incorporate some of the finance and budgeting areas that you might like to look at. Next slide, please. Okay, I've done an awful lot of talking. So just to go over some of those areas of categories. So if you've got indefinite leave to remain or enter, you will need at least 3 years residency for us to be able to give you full support. All right. But if you fit into the refugee status, humanitarian protection, indefinite leave to remain under domestic violence, indefinite leave to remain as a bereaved partner, stateless person, Section 67 or Calais leave to remain, the ARAP or the ACRS, pitting, that's for the Afghan, or the Ukraine scheme, you do not have any ordinary residency to meet. Soon as you get that status, you will be deemed as an ordinary residence and you can apply for full funding from us. The one that I talked to you about, the long residency, you need to be able to provide proof of your residency here that shows that you've been residents for that, but you have to meet residency requirements of 3 years, like the indefinite leave to remain. You've got to be an ordinary resident here to be able to apply for full support. Next slide, please. Now, basically, I've done this because universities in England have something called the Office for Students that provide them with guidance to be able to try and ensure that they're helping people to be on an equal footing trying to get into higher education. And their guidance has basically stated that universities should try to provide a named contact for refugees to be able to find their way around the university and to be able to get information and guidance.